All right, so let's just run through Forex real quick again. You know, get the dollar right, you'll get a lot of other markets right. Top down on the dollar, we've had this nothing but really too exciting on the monthly level. Are we moving higher? Yeah, but what's the angle and distance like? It's pretty poor. So you still have a rising 8, but it's not as momentous as some of the moves we've had coming out of, the back half of 2014 and 2018. But we're still on the 8. Monthly cycle may turn over there. I care a little bit more about the weekly and the daily. You're still in an uptrend on the dollar. So if the market's priced in this Fed to cut, and I've heard 3 or 4 times, I didn't really get to see what the Fed funds futures look like, but it seems like it's a little bit quick considering the sell-off we had in equities. We really didn't even get anywhere near the December lows. Case, if the market's already priced in that many cuts, then how is a dollar really going to keep backing off is the question. So I think you're going to probably get a higher low at or near the 200 here. Most traders will have that on DXY. You're going to have that on the bands. The higher lows that we care about really are from February, and you can see that on the euro. See that on the euro. Where are we at? The weekly cycle is still coming up. But we broke above the band, so this same level on DXY in front of 95, call it, is basically the 114 and a half level. At that same point, you'd have our pi line coming down into that same region. So we know that when we break the bands, it's either usually a move back to the 200, the bigger pullback, and or pi. So those are the 2 points to kind of manage our core dollar long around. Some euro versus the dollar in the cash market this morning. Still short futures, but I'm kind of looking for this to roll back over in front of the 200, and then I'll add to it, and we'll see if that would line up with equities rolling over. But let's handle a couple other FX market. Cable still in a pretty good downtrend. We've had an oversold relieving bounce. This still looks like to me like it's got room to retrace higher. So I haven't sold anything on as far as like Dragon goes. Pound versus the yen. Still have that daily cycle come on. It's just beat up a lot more than something like dollar yen. I reshorted a little bit of dollar yen against my euro yen long. There you've got a topping tail. That's the same trade as I was saying earlier. Buying the yen futures on this pullback, it's the same trade as shorting dollar yen. But look how the daily cycles come down. And then we held the bands. We actually held pi really nicely on the hourly. So I'm still trading that around alongside. That was the only trade I've done this morning, is book a little bit of gains there that I added to on a couple of these dips. So I like that. It's kind of the same trade as being long treasuries. Treasuries are still like being long more. I guess I'll hit on that next. I did lighten up on a third of my long here on this pop. So we bought really well. I guess was that yesterday morning I added? Can't remember if that was yesterday before I got on the plane. But again, if the Fed continues to get more dovish, good for treasuries. That kind of hedges your dollar longs. And then obviously if equities roll over, it's also, growth slowing, equities rolling over, risk off trade, good for treasuries. Fives, because I lighten up on tens, I guess I won't sell any fives until we got back to the top of the risk range, which is closer to 117.30. Give it another 8 or 9 ticks, and I'll short some fives against my long 10-year. But I want to stay directionally outright long tens for sure. And even if we look out the curve, you want to look at 30s. Looking for some day trade opportunities if we break in equities, guys. So what I care about there is, notice this daily cycle is low. We were oversold at new lower lows. We always want to take profit on lower lows, which we did a good job of covering. And notice there's a swing line here. I'm going to draw it in a second. So there's a lot of room to the 8. This has been a pretty big squeeze. There's plenty of downside risk here with this daily cycle. And if that's the case, treasuries are probably going to be at new highs. So we can look at buying dips, day trade in the long end. I guess I'd be a buyer closer to like 10 ticks deeper, 153.20. 15-minute cycle, you'll see is kind of high there. So any little bit deeper pullback on long bonds, but still a better buyer on there. And then in equities, just to wrap up, what I want to watch is this the TMS here. Well, the TMS, there really isn't any higher lows. The technical market structure has just been basically a V bottom, and then we haven't even really had a pullback. So I'm watching the bands on the hourly, and then maybe you get a higher low on the 4-hour, closer to like 28.40, 28.45 in S&Ps. So I bought a bunch. You can see these orange arrows. I bought a bunch of puts into 20 in front of 2,900 strike puts. They're only out like a week, 10 days or something like that. And if we start to break the bands here, I have a small long on the Dow. So this is the swing line, right? Follow the prior candle's low, and we took that out yesterday. So that's a swing line bearish setup to the downside, right? That's what I was saying I was going to draw. And then we got room for the cycle to come down. So the little that I'm long in the Dow, I'm going to get heavier short. Probably sell futures on a break here, and or sell the Russell. So I'm a little Russell futures. Small cap is one of the worst places to be this line. So if we take out this low I'm watching, and the Russell is like 15.11, I'm going to add, I got a bunch of stupid regression channels on there. I'm going to add to that Russell short, which we covered really well here on the lows. We reshorted some pretty well covered. I reshorted and then I covered pretty quick, like that last Friday. So that's the plan, guys. As it looks like we start to break, is I'm going to rotate more into more short risk via the Russell equities or S&Ps. I'll keep a small long on the Dow just to have on the other side, because we're still long the VIX in a pretty major way. And we covered a lot of our UVXY. So still have a long on the VIX. That's showing like the same 16 level. If we start 16, 17, or start to get above there, it's going to look like the market again. And here's what UVXY we covered up pretty well on the lows the last couple of days. So I'm pretty flat there. So there's plenty of room for that inverse ETF to come back up to like the high 30s and 40s, and then I'd start to reshort that. So same game plan. I just want to see if we can break or not, and I'm not quite there. What do you guys have going on?